Hi guys, how's it going? It's Anratom Chagi and welcome back to my YouTube channel. Into this video, we're going to look at companies that will be paying dividends in this month of Feb. And please note that some companies did not declare the dividends, so I am not going to mention them due to no information because some might not even declare these dividends. And before we get into this video, please note that I am not a financial advisor and none of my videos constitute as financial advice. If you are looking for financial advice, please speak to somebody who is registered and certified with the FSCA. And the first company we have is Nampak. This company engages in the manufacture and sale of packaging products in Africa, and they have declared a dividend of 6 cents per share, and this dividend is payable on the 17th of Feb. And in December, they have reported on their earnings, and their earnings per share increased from a negative 1.1 to a positive 76 rands and 63 cents. And note that the earnings per share is very important as it indicates how profitable a company is in relation to its share price. And revenue is almost at 10 billion, and in 2023 revenue was down 40%, and the growth is insane, and the net income is up 4.67 billion from 2023. And if we look at their 6 months share price performance, it's up 20%, and this could be due to their increase in profits. Like I say all the time, that when the company performs well, the share price will shine. And their plan was to reduce debt and sell non-core assets as their turnaround strategy, and it seems to be going well, and they're succeeding at deleveraging the company, and they have sold some of their business for 142 million. And you need to understand that non-core assets are often sold when a company needs to raise cash. Some businesses sell their non-core assets in order to pay off debt. Although non-core assets are not critical to a company's core operations, they do have value and generate a return on investment. However, some companies still do sell them to focus on the core assets that are generating them a lot of money. And here we see that revenue is forecasted to grow by 20%, and this will most likely cause the share price to increase significantly, because then it means that the company is expected to do extremely well, and that's what the investors want because they love this kind of attractiveness. And remember, there are a lot of factors affecting the share price, and the people that master this are the ones that are most likely to make a lot of money from the stock market, but we'll discuss this in a separate video. Now on the second company that is paying dividends this month, we have Cal Group, and they have declared a dividend per share of 1 rand and 26 cents, and this is payable on the 17th of February as well. And this company is in the agricultural industry. If we look at its finances, this company did not really have a good year. The revenue decreased by 3% and the gross profit increased by 1.9%. And this means that concerning the making and the selling of the products, they made a profit. But when we now factor in all the other expenses outside of the selling cost, they made a loss of 7.3%. And ideally, we expect the company's profits to at least increase with inflation, but considering the fact that they only have a dividend yield of 3.9%, this does not make the situation way too bad because they are not paying a lot in dividends. And the third company we have is Tronco. This is a cash operating company based in South Africa, and they have declared a special dividend of 7 rands and 30 cents, whereas their share price is 8 rands and 35 cents. And the dividend yield is at 88%, and this kind of makes sense because this is a special dividend, and the special dividend is payable on the 24th of February. And the dividend yield is obviously questionable at 88%, but you need to understand that this is a special dividend, and special dividends are usually high because they are extraordinary, and a lot of times they are declared because the company had a successful year, they have excess cash from their operations, and sometimes are used strategically to enhance shareholder value, to attract shareholders and positively impact the share price. And on the fourth place, we have the FNB 1.2 Global ETF, and they have declared a dividend per share of 26 cents, and this is one of the best performing ETFs. It is well diversified, and if we look at the share price movement, we see that in the past year they have returned at least 15%. And that's the thing with diversified ETF, because this ETF actually captures 70% of the world market cap and covering 30 countries. And you hardly go wrong with well diversified ETF because the first advantage is that they are well diversified, and because of that, they tend to perform the best. And personally, I say all the time that if an ETF can give me at least 15% returns, I am good with it. So this ETF does not have a high dividend yield. I think the dividend yield is at 2 to 3%, but Obviously, the rule here is low dividend yield, high returns, and high returns, low dividend yield, right? So the dividends being at 26 cents per share absolutely makes sense. And the last ETF we have is the FNB 500. This ETF has declared a dividend per share of 24 cents, and also it is well diversified. And that's it on the ETFs and companies that have declared dividends in the month of Feb. There were actually not a lot. I tried to do an extensive research to see how many have declared dividends, but these are the only ones that I could find that they have declared dividends as of today. Some are still going to have their annual general meetings and will declare dividends, and they're going to be payable probably in March. So I guess we will meet in March again to look at the companies and ETFs that will be paying dividends in March. Thank you so much for watching. I will see you in my next video. Bye.